But, oh, man, I like when things work out that way. So we can see how many people join, but they can't, correct?
So you have people joining in now. Are you on the live mode yet?
I am.
Okay.
We're live. We can let them in.
Oh, just one thing. I can't approve anybody in once the video is up.
Who's gonna do that?
I don't think you need to approve anybody. Once they just come in, they log in.
All right. All right. I want to be like Tenny when I grow up.
What do you mean to travel and go lose your voice from having too much fun?
Exactly. That's exactly right. He looks like he is having an absolute blast.
Yeah, it's been a while since he went back home, so I can understand.
Nice. All right, it looks like we have a couple people in the room already. Welcome, welcome. Welcome, welcome. All right.
It's a really nice shot of the building. Thinking about it.
It is.
Yeah, it's beautiful.
It is. It is indeed. We'll give it a couple minutes for some more folks to join. Yeah, see folks trickling in, trickling in. All right, we'll give it another minute or so. And then we will get started. All right. Well, we're going to get started so that we can be mindful of time and make sure that we are respecting people's time. So Joe, you want to get us started with the video and then we'll dive right into it. Thank you. Thank you, thank you, thank you. Welcome everyone, welcome to the Investors Information Webinar presented by Freedom Capital Investments on our amazing investment opportunity for Land Bank Lofts. Before we get started, I want to introduce my esteemed colleagues and also just want to give a little housekeeping in terms of how to ask questions and get them responded to. So first and foremost, I am Linda Brooks. I am the principal and founder of Freedom Capital Investments. I am also the host of the Multifamily Investor Ladies podcast, and I am super excited to have you here with us on this evening. Thank you so much for taking some time to spend with us. Joining me this evening is Leslie Awesome. I like to call him Leslie Awesome as in awesome. And he is one of the strategic partners with Excite Capital. He's a co-founder and director of operations of that amazing syndication operation organization. And also joining me is my colleague and comrade, not only in arms, but also in real estate, Mr. Joe Danza, who is holding it down and making things happen in the background. If you have any questions during the presentation, place your questions in the chat box, and we will address those questions in the chat, or we'll address them at the end of the presentation. So we're going to go ahead and get started. Joe, next slide. This presentation is for our most recent investment opportunity, Land Bank Lofts in downtown Columbia, South Carolina. It is 113 units, and it is open to accredited investors only. Next slide, please. We're going to go through some of the legal disclaimers. Of course, we have to put through our attorneys require us to do that. Executive summary. We're really just going to walk through this deal deck to let you know about the market, about the opportunity, and the next steps and action plan for you. Next slide, please. Here's a picture of the exterior of the building, a beautiful architecturally designed building, and I'll tell you a little bit more about that shortly. Next slide, please. Some additional photos. It is a historical landmark because it was previously a bank in South Carolina, and we've had the opportunity to take over this asset that has been preserved and have some benefits from that preservation. Next slide, please. The sign for the original bank remains on the building, although it is now a Class A apartment building in downtown Columbia, South Carolina. Next slide, please. Here are some photos for the interior, the bathrooms, the living spaces, and also the very masterfully redesigned lobby and elevator bank. Next slide, please. All right, so here's a photo, a collage of photos. It gives us some idea of what the exterior architecture looks like and just highlights the fact that it is in downtown Columbia, South Carolina. It's walkable. It is walking distance to the business and entertainment district. And if you look to that lower left-hand corner, what you'll see is the entrance to the 145 surface parking lot that is included with the building acquisition. Next slide, please. All right, we would be remiss if we did not follow our attorney's guidelines and provide this disclaimer to you during this presentation. I'm not going to read it to you, but please do take a second to scan it. Essentially, you need to contact your attorney, your CPA, and your other professional advisor to determine if this investment opportunity is suitable for you. Next slide, please. All right, executive summary. Next slide. Okay, so here is a bit of a background on this building. This building was built in 1934, and it was built as a bank. And at one point it was 3 stories, and then it was renovated to 6 stories. And in 2016, the previous owner redesigned it and redeveloped it and created it to be apartments in downtown Columbia, South Carolina. That picture of the vault door in the lower corner is the door entrance to someone's apartment. So that makes like an amazing conversation piece to anyone that's visiting or socializing, but that is so cool. So we're so excited about this opportunity, and you'll see why as we go on. Next slide, please. Little bit of a summary. We're picking up this amazing opportunity at a 5 cap, 113 units on 2.2 acres, including 145 parking spaces. Again, massively redesigned in 2016. So this is considered a Class A property. It is currently 99% occupied, and we're picking it up for $17.45 million. Our equity raise is 5.72, and our hold period is currently 7 years. That is our plan, to hold this property for 7 years. Our IRR is projected to come in at 15.1 to 18%, with AAR at 19 to 25, and equity multiplier from 2.3 to 2.7. So for our LP investors, what did that mean? That means that for you investing in this opportunity, you will have an opportunity to experience those gains through passive income. Next slide, please. All right, so Columbia, South Carolina. Why do we like this market? Typically, when we go into a market, we like to pick up more than one property because it allows us to introduce operational efficiencies and economies of scale, which you'll be able to see when we get into our property manager that we have on board for this property. Next slide, please. We are in love with Columbia, South Carolina for various reasons. First and foremost, it is one of the top tier growing markets, and it is on the convergence of 3 major interstates that takes you to other popular destination locations like Charlotte, Charleston, and Atlanta. And anyone can travel to or from those areas from Columbia within a 3-hour time frame, which is a quick car ride in any metropolitan area, especially if you live in DC like I do. That can be a one-day commute to and from work, right? Next slide, please. Here are some accolades about Columbia, South Carolina. It is always winning awards for being the best city to live in, the best place for small businesses, the fastest growing city for millennials, the best place to raise families. And Columbia, South Carolina continues to grow. It continues to expand. There's so much going on in that city right now that we are so in love with it that we're going to pick up a few more properties in this area. But we're growing the portfolio with this one. And as you can see from here, it is and continues to be a target and a top tier market for investors and people that want to relocate, not to mention that the cost of living is so much less than places like New York City, which is where I'm from, and DC, which is where I live. And so I can attest to the fact that you can have a much better lifestyle, especially if it's someplace where you want to live downtown. It just becomes more affordable. Next slide, please. So by the numbers, Columbia, South Carolina continues to grow. Its population has increased over 8% over the last 10 years, and is projected to continue doing so. And the only reason why a city has population growth is because there's reasons for people to be there. There are jobs there, there are opportunities there, there's great schools there. There's so much to offer that it becomes a desirable location for people to live. Not to mention, although Columbia, South Carolina is affordable, it still has experienced astronomical rent growth with a 10% year-over-year rent growth, which is amazing and is projected to continue along that path into the future. Next slide, please. So here's just some additional information on the strength of Columbia. It just talks about the nature of the city, the lifestyle, the ability to have access to healthcare and large employers, and that they're bringing in jobs, and they're developing parks and trails just to make it an outstanding place to live so that one can have a good quality of life. And the expectation is that the growth of the city will continue to exist well into 2030. Which, by the way, we would have held and potentially divested of the property by then, but we'd be able to take advantage with this investment of the growth in Columbia that we'll experience in our portfolio. Next slide, please. So this is one of my favorite photos. The orange line around the building in the middle shows the line around the property that we'll be discussing tonight. That is Land Bank Lofts. And it is smack dab in the middle of downtown. It is in an absolutely phenomenal location, right? Item number 1 you'll see is the YMCA. Number 2 is Prisma Health, which is one of the largest healthcare employers in the market. Item 10 is the University of South Carolina Law School. And then the other ones are just other places that people will go to get to. But the point here is just carving it out from an aerial perspective allows us to see that what a premier location this is. And it just provides ease of access to get to work, to enjoy parks, to enjoy business and entertainment. And it is like the top tier location that we could possibly ask for. Next slide, please. Some additional information about areas that are walkable from the building. We have shopping plazas, they have festivals, and there's just so much that's available to potential tenants and existing tenants. From a walking distance perspective, that means no vehicles, no traffic, no frustration. You can either walk or ride your bicycle to these destinations and enjoy a good quality of life. Next slide, please. So this is something that we are super excited about. The Bull Street District. This is a $1.3 billion development project just blocks away from Land Bank Lofts. And by blocks, I mean literally about 3 or 4 blocks away from Land Bank Lofts. And what this is, it is a 20-year, $1.3 billion project where the city sold the medical campus for one of the hospitals in the city to a private developer. And they're using this 181-acre space to develop live, work, play, co-working spaces. Businesses have moved in there. Starbucks has already opened there. Capgemini, which is a large technology consulting firm, has already moved in there, bringing with it several jobs. It's a 20-year project. It began in 2010. So there's a good 9 to 10 years remaining. And this property, Land Bank Lofts, is in the path of progress for the development of this project. And so we will have an opportunity to participate in the growth as a result of this project and the activities that will bring more people to Columbia, South Carolina, as well as increase the value of properties and investments in that market. Next slide, please. Here's a photo of the field where I think they're called the Carolina Fishers, is the baseball team, the local baseball team for Carolina. They just signed an agreement with the Kansas City Royals to be an affiliate, to be part of the minor league baseball team, which means that will drive more people into the city that are interested in minor league and to see whatever the process is as they move up in the leagues. And so again, that Bull Street District surrounds this baseball stadium, which again will drive more traffic, drive more entertainment, drive more growth to that Columbia, South Carolina market. Next slide, please. Did it change? Okay, there we go. All right, so University of South Carolina. Now, I know people from California that'll say USC is for University of Southern California, which it is, but I also know people from South Carolina that say USC is the University of South Carolina. In this case, it's going to be the University of South Carolina. That school is a $3.7 billion economic driver in Columbia, South Carolina. And I don't typically follow college football, but those that do are very familiar with the Gamecocks. And what having the Gamecocks there with a premier institution, that football league, that football franchise generated $140 million worth of revenue to Carolina between 2018 and 2019. And the University of South Carolina is ranked number 17 in their division as a top tier school. So when we tell you that the economy is thriving in Columbia, South Carolina, and it's going to continue on the trajectory of growth, we are excited to be able to purchase and acquire that property right in the middle of downtown with easy access to these locations to include Gamecock-related activities. I think that anyone that has an opportunity to participate here will be happy with the performance given the growth projected in Columbia, South Carolina. Next slide, please. Here's some information on some additional employers. Insurance and technology tend to be the top tier employers in the Columbia, South Carolina market. The places like Blue Cross and Blue Shield, Accenture, I mentioned Capgemini moved into the Bull District redevelopment site, and also the largest training facility in the United States, Army Fort Jackson, is also located in South Carolina. And those of us that are military personnel, such as myself and Joe Danza, we spent some quality time down there at Fort Jackson. And so we'll spend quality time in the area as well as at the property. So we are very familiar with the area and are excited to be a part of this opportunity. Next slide, please. So here, as we talk about the market, we want to also look at the rent comps, right? We want to consider what revenue growth looks like for us at this property, given the growth and activity that's going on in the market. Taking a look at other Class A buildings in the area and other downtown related properties, what we've learned is that those properties, the rents for those properties can go for above anywhere between $1,100 to $1,600 in the market. What that means for us, the land bank Lofts currently has an average rental rate of about $1,100 per unit. That means we've got a ton of upside in being able to raise rents to be on par with market rents. So conservatively, we've estimated that we could potentially organically raise rents by at least $100 per unit prior to us adding any updates or any changes to the property, just to get us to the market rent. As we scroll through the next few slides, what we'll see is we'll see rents for the different properties that are noted here by the numbers. And you'll also see that they're all 100% occupied. That means that there's room for growth, right? In order to be able to, that means not only is there room for growth, but that means that there's not enough housing for the people that are coming into South Carolina, such that the buildings are all 100% occupied. So we have opportunity here to provide housing and to keep people comfortable. We have opportunity to add amenities, but also increase rents, which increases cash flow, which increases net operating income, which flows to you, our investors. Next slide, please. So here are some comps over the next couple of slides. You'll see the average rents for each of the comps, and they'll range from $1,100 to up to $1,600, and our average rent is somewhere around $1,100. That shows that we've got some area for movement and increase and pushing rents up so that we're on par with market rents. Keep going. Next slide, please. Next slide. And I think this is the last one. Next slide. There we go. So we talked about the market. We talked about the growth. We talked about what we expect to see in the path of progress in Columbia, South Carolina overall. Let's talk a little bit. We talked about market rents. Let's talk a little bit more about the property. Next slide, please. So what this picture shows, this slide shows, is the finishes and the upgrades that were made when this property was redeveloped from a bank to apartments. The seller is a developer. And the reason that the seller is selling this property is because they acquired it to develop it from a bank to apartments. And now that they have completed that development process, they are divesting of the assets because they are not apartment operators, they are developers. And we happen to be in the right place at the right time with the right connections to be able to pick up this beautiful property off market with these finishes in downtown Columbia, South Carolina. And you'll see that it has a pool. It has updated kitchens with stainless steel appliances and a beautifully finished and exquisite lobby that we'll be able to add some additional amenities to improve the lifestyle of our tenants in that space. Next slide, please. Location, location, location. You've heard me mention it before. It is in a fabulous location. Downtown Columbia, South Carolina, walking distance to tons of activities, walking distance to places to live, work, and play. And again, just with all of the money that's being poured into the downtown Columbia, South Carolina market, this property is in the path of progress to ride the waves of the growth that is projected for this area. Next slide, please. Here is some information on some of the employers, some of the strengths and the economic drivers, particularly as it pertains to healthcare, and as I mentioned, to the military installation. Next slide, please. So here we have some information on the unit mix in terms, not so much the unit mix, I'm sorry, the tenant base for the tenant population within the property. What we've learned through our due diligence is that the average income for the tenants in the land bank Lofts is $113,000 per year, which is amazing for Columbia, South Carolina. Now, about 14% of that population is made up of students, given that the school is right in walking distance from the property. And we're okay with that because their parents sign those leases and their parents pay those rents. But the majority of the tenants in this building is comprised of professionals. healthcare professionals, financial professionals, management professionals, but professionals overall. Next slide, please. Next slide, please. So here's the property profile. Overall, the land bank loss, we're picking it up for 17.45 million at 113 units. That covers 2.2 acres of land and lot size on the property. Built in 1934 and completely redeveloped in 2016. It is currently 99% occupied and it is absolutely beautiful. The population in Columbia, South Carolina continues to grow. It's currently at 843,000, and it's approximated that it will increase to over 1 million within the next 20 years. And again, Columbia is a top tier growing market, which is primed for investing in a property like this at this time. Next slide, please. Some more interior photos of the lobby and also some of the units. Next slide, please. And here are some community amenities that already exist. So we talked about the on-site gated surface parking lot. We've got high ceilings, quartz countertops. It is very pet friendly. We have a ton of tenants. We have a lot of tenants that have pets in there, and we're planning something really nice for them in the business plan that I'll share with you shortly. And especially in the light of COVID, being able to offer each unit with a stackable washer and dryer is important because a lot of people do not want to go into public laundry rooms as a result of COVID. So being able to offer these amenities to our tenants in the downtown area, right? A pool downtown, you know, pets downtown, washers and dryers downtown at reasonable prices in a walkable community is an added benefit to anyone that's involved in this property. Next slide, please. So here's our unit mix. Primarily one bedrooms, one baths. We do have 2 bedrooms, 2 baths also. Generally, we like our unit mix to have a larger population of 2 bedrooms and 2 baths. However, because this property is in downtown Columbia, South Carolina, and the type of tenant that we attract, young professionals, millennials, professionals, single professionals, having a larger mix of 1 bedroom, 1 bath units is okay. And we find that it works well for this property in this location in this market. And so we are very comfortable with the unit mix that comes with this building. Next slide, please. So here is our business plan, which we're super excited about. Next slide. We have factored in approximately $700,000 as a capital improvement plan for this property. Now, given that it was completely redeveloped in 2016, there's not any deferred maintenance that's required to be left. So what we're planning here is primarily amenities to improve the quality of life for our tenants with, of course, some component for maintenance and or repairs. So we're planning to install a dog park to include a dog wash station. And yes, we're planning to do that in a downtown community. It has been done in other cities and it works well. And given we have so many tenants that have pets, we're going to add this amenity for their use and comfort. We're also planning to implement a water conservation program by retrofitting our plumbing fixtures that would allow for low flow and also savings, cost savings on those water related bills. What that does is those cost savings fall directly to our bottom line, which we can then share with our investors through the performance of the property. We're going to renovate the pool house. Yes, the property was completely redeveloped in 2016, but we're going to renovate the pool house to bring it from 2016 to 2021. And then we're going to put Amazon lockers and a packaging system in the foyers. And if anyone is anything like me, that's a complete Amazon junkie, you know that they will appreciate having just to go down to the lobby to pick up their packages from Amazon rather than hoping that they're still outside or they catch the delivery person. So that'll be a great amenity to add for our tenants. And from an interior perspective, we are going to add smart home features to the property to include thermostats, door locks, and other upgrades. And we're going to do that to all units in the building. In addition, there is some vacant space on the property that will convert to some storage space that tenants can rent from us, which will increase revenues from other income. And that again will drop to our bottom line that we'll be able to share in those profits with you, our investors. And lastly, part of that CapEx budget includes a component for elevator repair and replacement, because we always want to make sure we have funds and reserves to cover those types of costs. Oftentimes they come unexpectedly, so we make sure that we're prepared. Next slide, please. And so here's a photo of some of the smart tech apartment packages that we're planning to install, as well as the smart water valve and flow to reduce the cost associated with water usage. Next slide, please. So they do have some space in there that is like a business center for the tenants to use. We're going to kind of upgrade it, make it a little bit more contemporary, add some fancy furniture, make it so that it's easy to work if you want to work independently, or if you're working within a group, it has the flexibility to do that. And given that sometimes you want to change your scenery when you're working, to be able to have this space in your building that you can reserve is helpful for the tenants and makes it more comfortable and them willing to want to stay and pay any increases that we may give in the rents. Next slide, please. All right, so here's our business plan. The primary business plan, as I mentioned earlier, we're going to hold the property for 7 years. We're holding the property for 7 years because the purchase of this property is through a loan assumption, and the loan expires, and the prepayment penalty on the loan assumption expires in 2028. So the plan is to hold the property for 7 years, sell it in year 7, which will result in an AAR of 19 to 25% or 2.3 to 2.7 equity multiple for our investors. In the event, depending on what's going on in the market at that time, because no one can tell what'll be going on in 7 years, our secondary business plan is to, if it makes more sense, is to hold the property, refinance it in year 7, return 100% of your investor's capital to the investor. That will result in an AAR of approximately 17 to 14%. However, you as the investor will remain in the investment and continue to receive distributions for as long as we hold the property. Next slide, please. Exit strategy. Our preferred rate we're offering is 7% with an equity split of 70%, 30% to you LP investors and to managers respectively. Once we've reached a hurdle of a 22% AAR, that equity split shifts from 70-30 to 60-40 LP-GP respectively. When you consider our capital stack of 30% GP, 70% ownership, the remaining debt that's listed is the debt that we are assuming. We're not picking up any additional debt as a result of acquiring this property. And again, our target returns are 19% for AAR, 15% for IRR, 2-3 equity multiple, and average cash on cash of 7.6. And that assumes those target returns are assumed upon an exit. So that means when we sell the property, that is what we expect your returns to be. Next slide, please. All right. So now I'm going to turn it over to Leslie Alverson, who's going to go through the financial analysis and take us through that part of the presentation. Over to you, Leslie.
Oh, thanks, Linda. And thanks for having me on the presentation. So like Linda explained earlier on, we are purchasing this property, entry cap rate, T12 cap rate at a 5%, and we're getting it with a 99% occupancy. Average DCR is like 1.64%, even though we're assuming a loan. And the IRR 15.1 to 18.1%, AAR 19 to 25%. And equity multiple of 2.3 to 2.7%. And one thing that I need to mention is this property, these projections were made very, very conservatively, which is something that we emphasize on in every deal that we go into. No matter how good it looks like, we try to be as conservative as possible, such that if we run into any surprises, we have cushions within the deal to handle those surprises. Next slide, please, Joe. Again, this is an assumable debt that we're picking up. So the principal balance is 13.575. So loan to value is going to be 78%. And the interest rate is fixed at 4.34%. So by the time we take over this property, there's going to be about 6 months of interest only payment left on that debt, which is great because for the duration of our business plan, essentially from year 1, we're going to be paying down on the principal. So that means we're going to be building equity, not just through appreciation, but through equity pay down as well. And that is amazing, considering, because over time that increases the cash flow. That cash flow returns back to the investors. And the loan term is 10 years with a fixed rate, with a 30 years amortization. Like Linda mentioned, the prepayment penalty expires in 2028. And one thing that we like about this loan is the fixed rate nature of the loan. I was just reading today, the Fed made an announcement that they're going to be interest rate hikes next year. Some investors are predicting that it's going to go up to 4%. Others are saying 3.7% by the end of next year. So they're predicting interest rate hikes next year and the year after that. So we don't know. For example, a lot of multifamily debt that is being given out right now is a bridge debt, which means that at some point, us as operators, we have to refinance some of that debt. And as an operator, you don't know what you're going to refinance into in 3 to 4 years. It might be 5, it might be 6%. But with this property, the debt is stable. In this economics time, this is an ideal property to have, and it cash flows from day one, from year one, with the principal pay down. So it's something that we're really, really excited about this. And I really feel grateful to be able to present it to our investors. Next slide, please. Again, this is just a little snapshot of the underwriting. I'm just going to point out certain numbers here for you. So the underwriting has too many numbers to be able to fit it all in one screen, but this is a good snapshot. So as you can see, our average market rent now is about $1,200, and the effective rent, which is the actual rent being collected, is about $1,100. We are projecting that over 7 years on exit from this property, our average market rent is going to be at $1,500. And our effective rent will be at $1,400. Like you saw on the rent comps, there are properties right now in downtown Columbia that are getting an average rent of $1,600. And these properties are 99 to 100% occupied. So there's tremendous opportunity for rent growth. The kind of lifestyle that is being built in Columbia is very, very attractive for tenants, for younger tenants to live in. So there's a high demand for these apartments in downtown Columbia. Which is one of the things that we're really excited about. And Columbia market is experiencing a tremendous amount of rent growth over the last year. Like Linda mentioned, the strategy of going into a market and focusing on buying other properties in the market. We recently acquired another property in Columbia, South Carolina in April of this year, the View at St. Andrews. And we've been able to raise rent organically at the View, that is without any renovation, by $150. So, and that is not something that's unique to us. A lot of the properties that are located in good areas in Columbia are experiencing this type of growth as well in the market. So it's a very, very strong market projected to have a tremendous amount of growth. And we're really excited to have a property like this in this market. And we're going in very conservatively, confident that at the business plan, we should be able to meet our projections and hopefully exceed it so that we can continue to under-promise and over-deliver to our investors. Another point I want to highlight is the taxes, which is highlighted here in yellow. Like you saw in the presentation, this is a historic building. So it qualifies for historic tax credits, right? So the taxes on this property is fixed, which is something that is unheard of in South Carolina. In Columbia, South Carolina, when you buy a property, you got to underwrite and be ready for a big tax hit the next year. And we've struggled to find properties in this current market that work. Primarily, one of the reasons is because of that. Because you get a property, and by the time you get like a tax assessment estimate or over the duration of your business plan, it eats tremendously into your cash flow. But this property is staying stable for the duration of our hold and beyond. And there's even an opportunity to extend those tax credits because of the historic nature of the building. And it truly is a very, very beautiful piece of art, really nice property that we can't wait to own it. And we look forward to you guys joining us and being part of the ownership group on this property as well. Next slide, please, yeah. This is just a sensitivity analysis. It kind of shows you what might happen if the market changes so that you know what your investment is, the level of risk that you're exposing your capital to. So we are going in this property at a 5 cap rate, and we estimating that we're going to exit at a 5.7 cap rate. That is giving in a 10 basis point increase in cap rate year over year, which is conservative enough to cover changes in the market. But now the average cap rate for Class A properties in Colombia right now is about 4%. Like we've seen properties, Class A properties in Colombia that have sold for 3.5%, even 3.2% of the cap rate. So you see from the starting point that we're going in, we're already going in conservative. And part of the reasons why we're getting it at a much desirable cap rate is because of the interest rate. So the interest rate is working in our favor because we're getting the property at a much higher cap rate versus what the market currently is. So when the cap rate expands from where it's at right now, it might meet us where we are when we are on exit. So that means it might expand to maybe from 3.5 to maybe 5, or from 4 to 5, and which is where we are right now going in. So, but we're not projecting based on that. We're projecting based on where we end. We're getting into the property and saying that's where we're going to exit. So based on those projections, we're able to give you a 2.3x multiple on your capital, 15 IRR, and a 19% average annual return. Now, if things were to go the other way, and let's say the cap rates come to where we are right now, you're going to be looking at about a 2.7x multiple. Now, if things go really, really bad, right, and the cap rates expand significantly from like the 4% where they are right now to maybe 6.25%, you still end up with a 2.x multiple. It is very, very difficult to find a property like this. And it is even more difficult to find a property like this in this market. From looking at the numbers and underwriting properties and seeing what we see in the market, it is very, very difficult to find a property like this. So you can smell from the excitement, the smile on Linda's face that we have on this one. This is really a good one. And I'm really excited to be presenting it to you guys. Next slide, please. This is just an illustration of what the typical investment will look like. If you invested $100,000, this is what your cash flows are estimated to look at based on current underwriting. And again, these are projections, and this is based on the actual cash flow on the property right now and our business plan. Year one, you estimated to get about $6,700 in cash flow, which is split up quarterly. Year two, that drops a little bit because year two is when we pay full year of like principal pay down. It drops a little bit by about $100. And then from year three, as we pay more of the principal down, that cash flow increases. And as the rents grow organically. And one of the things that the underwriting did not show, while Colombia is a 10.2% annual rent growth, we projected rent growth year one at 4% and the subsequent years at 3%. And they're projected to be much higher than that, but we like to stay conservative and be able to achieve maybe higher those numbers. So based on those, on our underwriting, this is the cash flows that you should expect as an investor of $100,000. And on sale of the property at year 7, based on your ownership share of the entity that owns this building, you are going to get about $80,600. And once you add your annual cash flows, you add those numbers together, and the $80,000 plus your initial $100,000 investment, you end up at the end of the business plan with $234,000. That's a 2.3x multiple. Really, really strong returns that it's very rare to find it in a Class A building. Next slide, please. Again, just one more slide to reiterate this fact. Taxes are fixed until 2034. So taxes, the tax benefit stays until the way past our business plan. And there's even an opportunity to extend the business plan, the tax credit. In one of the pictures, you saw the green awning. That is one of the awnings that was in the original building that was built back in the 30s. And one of the things is keeping that and preserving that history. The city of Colombia encourages that. So we might be able to extend the credit past 2034 for ourselves if we keep it longer, or for the new owner when they take over from us. Next slide, please. And I guess on that note, I'm going to pass it back over to Linda.
Thank you, Leslie. Thank you for taking us through those incredible numbers. Incredible. All right, so we're going to move on to some additional information that I am sure some of you all of you want to know. Who are we? Next slide, please. Next slide. So, I'm Linda Brooks. As I mentioned at the beginning of the webinar, I am the principal and founder of Freedom Capital Investments. I am also a 20-year plus career professional in the financial services industry, a CPA by trade. I'm also a major in the United States Army Reserve. And so I earn every ounce of my pay. And as I mentioned, Fort Jackson is someplace in Columbia, South Carolina, that I have an opportunity to spend a lot of quality time. I currently have approximately 21 million in multifamily assets in the Freedom Capital Investments real estate portfolio. I have an amazing team that I work with. I experience in real estate, multifamily real estate and asset management. And as I mentioned, I host a multifamily investor ladies podcast where our goal is to educate passive investors so that when they have opportunities like these, they make the educated decisions before getting into any investment. Next slide, please. I have the distinct pleasure of partnering with Excite Capital on this project, and that is with Leslie
Linda,
Yeah.
check your volume. You're getting some static.
Okay. How is it better now? I'm hoping it is.
Much better now, yes.
Okay, great. Thank you. Okay. So I have the distinct pleasure of partnering with Excite Capital on this project, who will be also sponsoring and be part of the management team as well. You've had the pleasure of meeting Leslie Allison, and that team consists of the gentlemen on the screen. They are top tier, amazing group of folks. Leslie mentioned earlier that they had acquired another property in the Columbia market earlier this year, The View. I'm going to tell you a little bit more about that shortly, but that property is performing amazingly, and it is not it's not by luck. It is simply because you have experienced operators such as these that know what they're doing and bring the right people to the right deals. And so as a team, we are the right team for this project. Next slide, please. And here are our other strategic partners. And they will be journeying alongside us to take this property down. And we have the pleasure of working closely with Chris on the asset management side. And then Brad brings his visionary and experience as well to the team, and they'll serve as our KPs and journey along with us to take this property down and carry it through our business plan. Next slide, please. First Communities Management will be the property manager that will take over for the Land Bank Lofts once we close. And I mentioned The View, and so did Leslie, but what Leslie didn't mention was that, so First Communities Management is also the property manager at The View. And when I first started the presentation, I spoke about being able to pick up multiple properties in the same market to introduce operational efficiencies and economies of scale. That's what we'll be doing with the Land Bank Lofts, as First Communities Management also manages The View. What Leslie didn't tell you about The View was that a few weeks back, The View earned the Most Improved Property Award from the City of Columbia under the management of First Communities Management. So what that means is we've got a top tier management company that has well over 1,000 apartment communities across the country that they are responsible for managing. And they do such an amazing job at it that they've won accolades and awards to including the work that they're doing over at The View. So we're super excited to leverage their skill set over on this new property over here at Land Bank Lofts and to take it also to the next level. Next slide, please. We close out with a few real estate definitions and terms for some that may not be extremely familiar with them. And at that point, we open the door for any questions. Next slide, please. If you have any, please put them in the chat. But this is pretty much the conclusion of the presentation. If you like more information, you have questions, or you're ready to make a soft commit, you can use your phone to scan the QR code and it'll take you to our soft commit form, or you can contact me at the email on the screen. I don't see any questions in the chat. Does anyone have any questions?
We do have questions in the Q&A. Yeah.
Okay. Oh, in the Q&A. I'm sorry.
Can you see it?
I can see it now. Does anticipates distributions include a preferred return? Yes, the preferred return is 7%.
Yes, the preferred return is 7%, and distributions, the quarterly distributions includes that, and the investors get the pref rate of the 7%. Then the rest of the cash flow gets split against 70-30, with the investors getting 70%, and then the operators getting 30%.
What is the team's track record in this particular market, and have you already had an exit in this market or other? So the team's track record in this market is that there's another property. So Excite Capital is invested in another property in this market, and Freedom Capital Investments is also invested in another property in Columbia, South Carolina. So these are not our, so Land Bank Lofts are not our first property in this market. We have not had an exit in this market, as the properties that we've acquired, the one that I've acquired, Freedom Capital has acquired, was acquired in 2020. And then the View with Excite Capital was acquired earlier this year. So we have not yet had an exit in this market. Next question is, does the property manager have
just the other part of his question about the exit, one of our key partners, Chris Lento, has 18 years of experience in multifamily investing, and he's had multiple exits. He's not just a key principal, he's also going to be one of the core asset managers with myself and Linda on this property. So we do have the experience necessary for exits and management over a long period of time.
Thank you. The last question says, does the property manager have experience with mid-rise, high-rise, elevated properties versus garden style? You want to take that one, Leslie?
Yes, absolutely. Yes, First Communities is a top-tier management company that covers the whole Southeast area, and they do have experience with both high-rise and garden-style apartments. They are amazing. Had the opportunity to be there during the initial early access due diligence, and they had some of the elevator experts from that because the property management team has experts in every category. And during this early access due diligence inspections, which we do before we go under contract, just to check on the property to make sure everything is in check, they have experts from all different categories coming to the property. And we had the elevator guy come in and look at the shaft, looked at everything. And that's one of the reasons why we have that amount of money in reserves for the elevator, because we have the price for replacement and we have the cushion for any additional repair that's over there. So we feel confident going into this particular property.
Those are all the questions in the Q&A. Okay. Well, unless there are any other questions, thank you again for your time on this evening. And again, if you have any questions or would like to have some time for one-on-one conversation, please reach out to me at the email address on your screen. And if you are ready to make a soft commit because you are absolutely in love with what you heard this evening, go ahead and use your phone to scan the QR code, and I'll be sure to follow up with you as soon as possible. Thank you so much for your time and joining us this evening, and have a good evening.